Good day everyone. In this video, I'm going to be talking about the two major type of prop firms that we have in our industry. Alright, now these two different prop firms have different rules around them, and in this video, I'm going to cover in the two major things you need to understand about these two different prop firms. Now stick around so you tend to understand the different type of prop firms that we have and which one suits your style of trading. Now straight out of the box, we have the CFD prop firms and we have the futures prop firms. Now, first thing first, one thing you need to understand is CFD prop firms are not futures prop firms. They move differently, and CFD prop firms has its own pros and cons. Similarly for the futures prop firm, which I'll be covering shortly. Now we're going to be talking about CFD prop firms. Now, what are CFD prop firms? They are the popular one we know, our popular brokerage that we have around. But majorly, what does it entail? Now, one thing you need to understand is when it comes into prop firm by CFDs or CFD prop firms, it's your broker that controls every single thing, from your execution to your ask and bid price to even where price will be at. That's why we see that sometimes maybe we're on our TradingView app or we're on a particular broker. All right, we notice that price might be at a specific level, and when you're coming into your own broker, price might be at another level. This is one common thing found around CFD prop firms or broker. Now, another thing you need to understand is on CFD prop firms, we have spread, we have slippage, and we have some very tight rules. Spread as in at some specific time of day, spread can get extremely bad, especially in a very high volatile areas, or low volatile points, we have terrible spread. Slippage is a very common thing found around prop firms and even brokerage. All right, one thing you need to understand is CFD prop firms or brokerage give extremely crazy slippage, and then rules for CFD prop firms can get extremely strict with their rules. Now, coming into futures prop firms, first thing you need to understand is it is exchange traded market, meaning you are trading the real order book, the real live market. Right, you are getting your order filled directly from the market, meaning across all platforms the price is exactly the same. Let's say you find an asset and then the price rather is at 1,000. Coming to another platform, it will exactly be at that same 1,000, unlike what CFD prop firms or CFD brokerage. All right. Also, you're going to be getting real volume and clear data. One good thing you need to understand is there's nothing like slippage on futures market, or you don't have anything like spread, meaning there's nothing like ask or bid price. Wherever you place your limit order is exactly where you get your order filled in. All right, if price comes exactly to that level, you're going to get your order filled in. The only time you might get slipped out on very rare occasions is when we have extreme high volatile news, not caused by manipulation or someone is trying to stop you out, nothing like that. Except you are manipulated genuinely, you'll never get stopped out wrong. That's one thing you need to understand about futures prop firm. Now, in short, what am I trying to say? Once you're trading the CFD, all right, you're trading majorly with the broker. You're taking your wins and your losses, and it's the broker that is disbursing these wins. Some brokers that we know, or prop firms, or most prop firms, or all prop firms, are booked, meaning orders are not being sent into the live market. But when it comes into futures, your orders are actually being executed on the live market, just as if you're trading on Wall Street, something like that. Now, which one would you rather trade? The one whereby you get your spread, your slippage, you have your spread, we have extreme rules, we have your slippage, or the one where you are moving with regulated exchanges, meaning everything is balanced and we don't have wrong filters. Now, let me put you guys on the real bag around futures trading. Now, a prop firm actually posted this last week, or a few days ago, talking about the stats of people that trade with futures accounts with them. Now, what you need to understand is they have 35% pass rate. Now, that is extremely high compared to CFD prop firms, meaning people are constantly losing their account on CFD prop firms because of the rules, and sometimes they get manipulated or thereabouts, right? 25% of funded traders get their first payout. That means that if 25% of funded traders actually get their payout, what does that mean? Compared to 3% on CFD prop firms, right? You understand that futures prop firms are actually easy to pass, actually easy to secure payouts. Now, in the span of the last 4 months, this firm has disbursed $32.5 million. Compared to any CFD prop firms, you might never get this level of payout as a whole coming from a prop firm. One thing they have is uncapped payout, meaning you can get as much as $1 million in a single payout. It's very rare to find when it comes to CFD prop firms. But on futures prop firms, it's like moving without any barrier, right? One day pass, meaning you can pass your account within one day. Meaning, no, I don't advise this, but you can full pause your account and then still pass your account at once. Nobody really cares. 3 days to pay out. Instead of waiting a month or 2 weeks or thereabout, you get your payout within your first 3 days. There is no daily loss limit. Now, take your time to digest that. There is no daily loss limit. Meaning you can trade as much as you want, you can risk as much as you want, as long as you are being comfortable with that. No buffer required. One-time fee, no activation fee. We have different kind of futures prop firms that take activation fee, meaning once you pass the account, you still have to pay another money, or you get charged another amount to activate your account. That does not happen with funded. Next, no consistency rule in challenge. There's so many prop firms that have consistency rule, but on challenge phase, there's nothing like a consistency rule. Now that's a good man when it comes into futures trading. No benchmark days, 80% profit split, and pay attention, end of day balance based drawdown. What does that mean? I'll explain further. Please stick around so you understand what I mean by end of day. Access to trading as soon as payout withdrawal is requested. Meaning, as soon as you request your payout, let's say I want 1,000 and I execute it, let's say at maybe 1 a.m. As soon as it has been, as soon as you have requested for it, you can continue your trading immediately. So prop firms don't allow you to do such a thing till you've secured your payout. No time limit to pass your account is a very common thing you need to understand. Most prop firms give you unlimited time, and then you can trade news with futures prop firm. Now, from all these I've listed alone, you can already see the difference between the CFDs and then the futures prop firm. Let's talk about the account size when it comes into funded next futures trading. Now, for 25k accounts, you can get it as low as $99. For the 50k, you can get it as low as $149, and for the 100k, you can get it as low as $249. Compared to CFD prices, CFD are way more expensive. Now, maximum loss limits based on end of day balance. EOD majorly means end of day balance. Now, let me explain this end of day balance. Let's say your drawdown is $1,000, and then you are in a trade and it's running $1,500 in a loss. You realize that you have not lost your account yet. Why? It's until you close that trade. That is when you've maybe blown the account. Let's say you reported your account, all right, and then it's running minus 1,000. So it's running minus 1,000. All right, you've not lost the account. If the trade still later maybe comes back in your direction, the prop firm is still very much active. With CFD, you've already lost your account, but with futures, you're very much alive. But there's a but to it. End of day, meaning at the end of the day, whatever balance you are on, that is where your account caps at. What does that mean? It means, let's say your maximum loss limit is $1,000, all right, and at the end of the day, it's still running the minus $1,000. You've lost your account. So intraday, meaning within a day, if it comes back to break even and you close out at break even, you do not lose your account. Your account is still very much with you. Now, that's the rule that every trader loves, right? There's no daily loss limit, no activation fee, no minimum benchmark days, one-time fee, meaning no activation fee. Max position, they have their lot sizes are being calculated differently. They're calculated in contract sizes, all right, which if you want a video, I will talk about. All right, max position, there are some lot size, you have maximum lot size you can ever use, and then consistency of 40%. Consistency rule, if you're executing very well as a trader, consistency rule is a breeze. And then we have a stretch of up to 40%, right? And reset fee, let's say you lose your account or thereabouts, you are paying less amount if you are resetting your account again. Now, that's all I have to explain concerning prop firms for today. I'll see you guys on the next one. Yeah, boss.